In a widely expected move, the US Federal Reserve has decided to keep its interest rate target range unchanged at 4.25 to 4.5%. While there were no immediate rate cuts, the Fed signaled 2 rate cuts later this year, offering hope for borrowers and investors. However, Fed officials acknowledged rising uncertainty in the economic outlook as inflation remains above target and growth slows down. Here's what it means for the US economy. The US economy is now expected to grow by just 1.7% in 2025, down from the previous estimate of 2.1%. Inflation is now expected to increase to 2.7% this year, slightly above the Fed's 2% target. The job market may weaken too, with unemployment projected to rise to 4.4% by the end of 2025. Following the Fed's announcement, investors cheered the news. The Dow Jones surged over 500 points, while the S&P 500 and Nasdaq gained more than 1.5%. As markets welcomed the confirmation that rate cuts are still on the table. The Fed's decision also had a positive impact on Indian stock markets, driven by expectations of lower US interest rates in the coming months that make emerging markets like India more attractive to foreign investors by weakening the US dollar and reducing US Treasury yields. Now what's next? At his press conference, Fed Chair Jerome Powell pointed to the recent tariffs as a major driver of inflation, suggesting that trade policies could delay progress in bringing prices down. Some economists outside the Fed have even raised their chances of a recession, though Powell believes a major downturn is still unlikely. However, uncertainty remains. With inflation and economic growth concerns still in play, the next Fed meeting will be critical in shaping market expectations worldwide.